Hello and welcome to Finextra. I'm Emily Horler and I'm here with Matthew Long of Oracle and Michael Davison of Atos. Thank you both for joining me.
Hi.
Why is money laundering such a big issue for the global financial system?
Well, look, the world has become interconnected. Huge international money flows around the globe day and night, and banks are the engine room, the centre of that. And that's why it's so important that banks not only safeguard their reputation and have very strong anti-money laundering operations, not just for the domestic economy, but to make sure that the global financial system is as stable as can be. London is one of the world's financial centres, and so the eyes of the world are very much upon us, and it therefore intensifies the focus on the UK banks and the banks that are sited in London but are international, or indeed global, to get this right. We should be clear. Counter-terrorism and financing and anti-money laundering is big bad business. In 2009 it was estimated by the G20 that they were responsible for $1.6 trillion worth of value. That's big business. And equally our own government, which published the first national risk assessment only last month in October of this year, declared in very strong language for the first time that this is a threat to our national security. Not heard that one before. And it also estimates that every year it's costing the UK economy £24 billion in social and economic costs. So I guess with that backdrop, it's clear that the FATF, which has set out the agenda for change, which is reflected in the EU fourth anti-money laundering directive, it makes it so important for banks, legal services companies, money services providers, estate agents and so on to work very hard to comply by that deadline, and why it's therefore so important that their systems, operations and processes are as robust as they can possibly be.
Matthew, what are some of the financial crime and risk management challenges that the industry faces today?
So there's two different dimensions to that. If I put the sheer volume of regulatory compliance to one side for a moment, there is a complexity to the criminal activity. It's multi-channel, it's cross geographies, it involves multiple people, and understanding that and getting visibility over different actions that both the criminals are taking and driving a suitable response is difficult. So we've seen a huge investment within the infrastructure in banks trying to tackle this. That's investment in people, that's investment in systems, and that's taking a real look across their organisation. And what we're finding is there's a huge amount of internal change which needs to take place within the banks to get their systems to talk to each other, to make sure their policies are up to date, and really underpin that all with good solid data foundations. So we're seeing a huge shift in looking at architecture and the solutions being put in place to combat all these activities.
How is the financial services industry responding to these challenges, both major players and new entrants?
So we're seeing different levels of response, really, depending on the size of the organisation and the complexity of its operations. But there are some consistent patterns emerging. We've seen over the past few years a huge investment in people, a huge investment in reviewing how the organisations, anti-money laundering controls and systems not only operate, but operate at an enterprise level. So historically there's been either an investment in unique individual targeted solutions for specific activities, whether that's types of fraud, money laundering, terrorist financing, risk, operational risk, all of these types of things had a lot of investment in those as individual solutions. Now we've realized that that's created gaps. And what banks are investing a huge amount of time in now is centralisation and bringing these all together to get a much more holistic view.
Michael, what's your view on this?
In terms of the other institutions, I think it's an interesting picture. Let's be clear, this is relatively new. The fourth anti-money laundering directive has ensured, or will ensure, I should say, that it's not just sufficient to have processes in place, if you will, a tick box regime, but that the institution has to prove the effectiveness of their anti-money laundering activities, which is an entirely different challenge. And so looking over the last 18 months to 2 years, when a supervisory regime is put in place by government, what it's done, as has been said, it's exposed gaps, particularly those financial institutions who are not banks, those other professional services firm types that I spoke about earlier. They're learning how to do this afresh. They're not used to it. and they're finding it difficult in some cases to prove the effectiveness of what they're doing. So it's an entirely new world, and I think that's reflected by the dialogue that's going on right across, well, certainly across the EU, if not globally, as to the best ways to do it and how to interpret the directive. It's important equally that smaller institutions are not stuck with an enormous capital investment in order to comply. And what we're seeing in the market is a number of subscription-based services starting to emerge, whether they be an outgrowth from a sort of a KYC, know your customer utility, or indeed a cloud-based subscription service which provides the core of the security that you need around fraud protection, around counter-terrorism financing detection, or anti-money laundering itself. And they're starting to come on stream, which is good news. There's more to it than that.
No, absolutely, and I think the focus on transparency and evidence has never been greater. Every activity that takes place in the bank now, they have to justify to regulators, to auditors, and they have to have evidence behind every decision. Because when something does go wrong, it becomes very, very important that the bank can justify that they have made the right decisions at the right time and can prove that. This is about being risk-based and clear and consistent. And that's why we're seeing more interest in data conversations than perhaps ever before.
Just another point, I guess, about the smaller institutions. Some of them, I think, are daunted by what they consider a high capital investment they'll need to make in systems. But just a couple of points on that. We've had for a long time KYC utilities, which have started to become more open and available. So SWIFT is an example of that, and there are many others. But also we're seeing the advent of subscription-based cloud services, which enable even quite small institutions to get on the AML systems ladder, if you will, without that big investment spike at the beginning. And that, I think, is a growth area which we're watching very closely.
And I think what we're seeing is the regulators, for the first time, really endorsing third-party outsourcing of various parts of risk and compliance. So we know that outsourcing has been a topic for a long time, but there's been a reticence and a reluctance to do that for financial crime and compliance. The UK regulator this year issued some guidance to say under certain conditions, this is now acceptable. So this opens up a lot of possibility to engage with third-party providers and look at different models of operating. And that's proving attractive. The utility model, the centralisation, the financial intelligence unit creation, all of these things start to become much more viable now than ever before.
Yeah, I think that's right. There's certainly a convergence of activity between compliance management, which sounds like an internal set of processes, and the management of financial crime and its outgrowths into organised crime and terrorism financing. These things are having to work not just at national level, but at supranational level. Typical case in point being Europol and Interpol working very closely, because as I said right at the beginning, this is about global international flows. It's not just, it doesn't honour shores and borders at all.
Investment in financial crime, risk and compliance continues to increase, yet banks must keep costs under control. How are they managing this?
So again, multiple ways, and some of those we've just touched on with regards to really looking for efficiencies without compromising compliance. So some of that involves hosting solutions. So how are they smarter and better with the tools that they use for financial crime, whether that's KYC utilities, whether that's outsourcing various parts of your compliance process or your operational risk process. So there are lots of different ways to look at that, whether that's a subscription service or whether that's something entirely new. So the market and the responses of banks are changing and evolving. And I think this is being driven, first of all, by value, but also by opportunity. Opportunity to work with different vendors, opportunity to have a view across their organization that's never existed before. So the environments are there. The focus on analytics has never been stronger. We're in a world where big data is at the forefront of financial crime, and people are starting to take steps, big steps to move in that direction. So it's exciting times for the industry.
So what's next for the industry? What are the major themes banks are focusing on?
In terms of themes, well, I think before a theme, they are working very hard to make sure that they are at or above the bar required of them by the 4th AML Directive. Let's be clear about that. And that needs to be in place, I think, by the end of 2017. So the clock is ticking. If there were a theme, I just think the world has become a turbulent place. And therefore, the focus or requirement on having clean money flowing through the coffers of an institution has never been greater, and it's not going to go away, unfortunately. So I would be thinking, what does AML Directive 5, 6 and 7 look like? What will the world look like in terms of interconnectivity in 5, 10, 15 years' time? And therefore, what do I need to think about in terms of skills, capabilities and operations in the future? So if there's any theme, it's think long.
Michael, Matthew, thank you very much.
Thank you.
And thank you for watching.